How's it going, everyone? My name is Ari and I'm here with the TipRanks team, now with Lowe's, one of the largest and oldest home improvement retailers, reporting their earnings today. There is no better time to dive right into the stock to determine whether or not it's worth adding to your stock watch list or even potentially investing into the company. Now, just before we get going, keep in mind that this is not investment advice, but merely an analysis of the stock using all of the TipRanks tools that we have for you in order to make a wiser investment decision. Now, with that out of the way, let's dive right in. So right off the bat, Lowe's is down on the year, where it was once trading for $252 per share and currently trading for $214.12 per share. That equates to roughly a 15% change, which may trigger a gut-wrenching feeling for some of you if you're new to investing. But I'm actually here to make quite a case for this home improvement industry leader. I mean, after all, we're talking about a company that was founded back in 1921. That's about 100 years ago, meaning Lowe's has experienced its fair share of market volatility and has, of course, prevailed. Not only has Lowe's overcome all of the ebbing and flowing of various market cycles, but throughout the years, Lowe's managed to expand and become a 2,000 plus storefront behemoth, employing well over 300,000 people throughout North America. Now, personally, as more of a longer-term value investor, when stocks like Lowe's with the lower beta sitting at 0.84 tumble in share price, I actually begin to pique some more interest. Now, their current PE ratio is below 20, which is what I like to see. The current PE ratio at 16.9. Now, as an investor, I think it's key to understand at least a macroeconomic backdrop, and even just knowing that home improvement retailers like Lowe's are impacted during these higher inflationary periods as it becomes more expensive for those DIY projects, keeping consumers out of the stores, or home sales are declining because interest rates are rising, which only further impacts top-line revenue for Lowe's and their competitors. Now, this all actually gives me more confidence to begin to look at some of these retailers because I think it's all just near-term volatility. Of course, supply chain disruptions, which have been ongoing throughout the past couple of years, have been a major factor for lowering earnings for such companies. Either which way, because of the conditions, we have seen hedge funds selling out of their position with companies like Lowe's to maintain strong figures within their portfolios, and insiders following suit over the last few months. But if we keep our eyes on the longer-term investors, this leads me to what analysts are forecasting, whereas they do foresee growth coming back with upside potential here of Lowe's coming up to $228 per share, even higher target share price here at $300 per share amidst an economic turnaround. Now, we see a mix of forecasting on TipRanks, but I personally like to go with top analysts. So if we toggle with their star rating to filter out anyone less than a 5-star analyst rating, we can see that the vast majority of ratings on Lowe's are actually buys rather than holds and sells. I want to jump into the crowd wisdom. Interestingly enough, I can see what other retail investors are doing, which it turns out that there has been an increase in buying, at least based on over 500,000 investor portfolios analyzed by TipRanks, with positive sentiment across the board. Now, those metrics are even stronger if we go ahead and toggle with some of the top performing portfolios on TipRanks. I personally, as a value investor, and often stating that it pays to be patient. So with a company like Lowe's, I definitely think it's worth a second look from all of us, especially as shareholders will get to take advantage of a company that has been shelling out dividends for over 59 consecutive years, and of course increasing that dividend year over year, making Lowe's a dividend king with a current dividend yield sitting at 1.67%. I would certainly love to know your thoughts on Lowe's, whether it's already in your investment portfolio or if you're planning on building a position with this behemoth of a home improvement retailer. So let me know by dropping a comment or two down below. And just before we get going, keep in mind that TipRanks is here to help you along with all of your due diligence prior to making any final investment decisions. So go ahead and begin your research right here with us. Now, until next time, thank you for tuning in.